Tobias, thanks very much for joining us. We've obviously had a kind of busy first half of 2022. A lot of change in the market, obviously. We've seen interest rates changing, cost inflation. What's your sort of take as we're now heading towards the second half of the year, really?
Yes, it's really an interesting first half year of 2022. We saw a lot of changes in the markets, really, and we are just now preparing the launch of our new Pyramid edition, which will be published at the end of August. And we just finished calculating all of the rental developments, yield developments for all over Europe, 23 countries covering 122 submarkets. And we saw very interesting changes. For example, when we look at the rental developments, we saw still a huge increase of rental values going up really in quite a lot of markets, because the demand for logistics space is still very strong. Of course, when you think of the crisis we are in, the different crisis and facts, the globalization, what we saw be sure for the last decade, everything is changing right now. So many colleagues and people ask if it's still a huge demand for rental space, logistics space, and we say yes. So there's a really surge going on, and the scarcity of land plots, the scarcity of available space is triggering rental price development.
We've obviously seen also a big change in terms of supply chains. How do you see that influencing the market going forward?
Well, there's a lot of discussion about reshoring or nearshoring tendencies, beginning since, I think, almost 2 years since the corona pandemic started. The incident at the Suez Canal, it is all piling up. So it's not one crisis, but it's more or less 4 crises we are having since 4 years. So just thinking about one crisis, one would say, yes, of course, everything will be get back in order in the next years. But when we think about everything what's happened so far and what will happen in the next 2 or 3 years, I don't think, and that's what many people think, it's not possible to go back to what we had before. So the shortening of supply chains, the and nearshoring tendencies, we will see it more and more in Europe. Of course, not everything will come back to Europe, reshore to Germany, for example, because it's a labor market which doesn't have anything to offer at the moment. We are desperately in need of labor force ourselves, so the wages are really high. The energy prices are really high. That were the reasons that companies moved to, for example, China. So when reflecting this, the companies, they're following different strategies. They have one strategy called China Plus One. So they are moving to additional markets to produce in Asia, and sometimes even to Europe back, but then more in cheaper markets like Eastern Europe, the south of Europe, or to the northern fringe of Africa, for example, Turkey. So that's more or less the nearshoring. So they are diversifying their supply chains, but we still think there's a lot of additional demand for production space, logistics space in Europe as well.
And in terms of the investment market, I guess, what are you seeing there in terms of demand coming into the second half of the year?
Well, the first quarter of this year was really strong still. And we saw a lot of transactions, not only in our own company, but on the market. Beginning in April and May, when the changes in financing costs really kicked in, there was a tendency of the market players just to lay low, stay and wait and see what happens. So the market, it's not dried out completely because products are still scarce, but the pricing started to change, not for all markets, but for some markets, very high-priced top markets, we saw a slightly reduced yield level already. And on the other hand, in markets still very reasonably priced, for example, like the Italian markets, we saw still ongoing yield compression. So it's quite different what we see across Europe right now.
I know we're going to go into more detail on the pyramid report when you've published that, but are you already seeing sort of anything in terms of demand, rental, what the trends are there?
I think the demand is still quite strong and will increase not only for this year, but the next year. Different reasons. We had a demand surplus growing since a few years already. We see record-breaking take-up levels in the last year and still this year. In the last year, of course, many take-ups were based on e-commerce demands. This is somewhat different this year, but what we call bread and butter business is really strong going. It's the reason why the demand is still quite strong. On the other hand, we weren't able to develop as much new space as the market would need, especially in this year. The project development is really difficult because of soaring construction costs, the financing costs, the due diligence is really getting more and more difficult to get financing. So the development market will lead to less new space, so which increases the demand surplus and the vacancy rate record-breaking low. And when a product is very scarcely available, then the pricing is going up, and that's what we see for the rental levels in many markets in all of Europe.
Really interesting. Looking forward to discussing in more detail the pyramid research as soon as that's out. And thanks very much for joining us, Tobias.
Okay, thank you very much. It was a pleasure talking to you.